This is the Euro New Zealand. This is a triangle that I've got involved with, and currently risking 34 for 101. As usual, let's go ahead and do the higher time frame analysis and take a look at why I've got involved with this. So we were kind of bottoming out here at this level just here, and what I mean by that is the market had come down, we'd seen a pullback, it had come down again, we'd come down to this structure level, not the lower structure level, we'd seen a pop, we'd seen a pullback, we failed to retest the lows, and now we're closing up within the wicks here. So because we failed to retest the lows and because we're closing up within the wicks now, this is just an indication that we could be seeing a rotation. So it's not anything I can trade, but it's something that I'm drawn to when I'm looking at this. If I bring the structure level up to this level just here, then this is a key level of support now, because we've got this test, this test, this test as well, and we've held it and we've made our way up. Now we have come up to this level, and this looks right here like a double top. The problem for me is, and I'm just going to bring this up to this level. Well, first of all, we do have the RSI confirmation for a double top, so overbought with divergence. The problem is, if we look at the structure level it's occurred at, we can say yes, we've tested here, here as well. We do have a level there as well, but these for me are not key levels where we could see a potential reversal. And the other thing that we've not done, and I'm just going to bring the structure level up to here, which is the closes of these candles. My rules dictate that we have to go up to retest the closes of the candles, and we have not done that. So because we've not done that, but we've formed this double top, this really invalidates the double top for me. So let's now also drop down another time frame to the 60. And if this is not a double top, then what could it be? Well, the only other thing it can be is a triangle. But for the triangle to be valid, we have to have two touches along the top, which is what we've got. We need to have a pole, and then we need to have the market hold at this level and not retest the closes of the candles. And so this is what I'm looking at right now, is this potential double test right here. If I just put a little structure level in there, you can see we've got wicks in that area, but we've not actually closed below it. What we don't have yet though is a hold and a higher high, higher close. So once again, let's drop down the time frames. Just before I do that though, I don't want this to get too complicated. I just want to show you what the market has done recently. We had this move lower, I pull back, I move lower, I pull back, I move lower, giving us a head and shoulders. We then saw a big rally. Here we put in a triangle looking like this. This was a trade I won on last week. And when we start to see these patterns, triangles and wedges, and typically we see, I don't want to use the word typically, but sometimes when we get one, we can get multiple. And because I do believe we have room to go higher here, as you can see on the 60, we haven't retested the highs either, then I'm going to be looking for a hold within this area. So let's again drop down the time frames. Now, we've gone to the 15 here, and it's not surprising that we have seen a couple of higher high, higher close candles. Because obviously the more time frames we drop down, the higher the chance that we're going to see that. But what I did see, it was on the 5 range, which is now in front of you, and it was this right here, this double bottom. And so I've actually used that double bottom as the entry. You can see we're pulling back now. Now we could be pulling back for a 26.18, or we could be coming back to violate structure and come lower. But because we've had that double bottom, this is an indication to me that this area has held, certainly held on the 60, the 5 range we've violated, but the double bottom is still valid. So I've used that as the entry. So if we go back to the 60, that means that I can get stops just below that double bottom, and then I can play for that 127 fib extension. Okay, let's just leave on the 127 fib. And just remove a few of these so that we can see clearer. Okay, so the problem here is that we are now shooting past this structure level, but the biggest structure level is this key level right here. And I'm just going to go back out to the dailies, take a look at this. And you can see then on the dailies, this is the main structure level for me. This is the area that I'm shooting for, and you can see that 127 fib comes in just before the closes of those candles, so giving me plenty of room there. So we're back on the 60 now. Let's work out the risk to reward again. Okay, we'll make that one green. And so the risk on this trade then is 34 pips. The reward is 102. Let me just make sure I've got these fibs in the right place. Yep. Let's have a look at this one. Yep. So I want to be 5 pips before. So in actual fact, 107 should be the reward on this trade. Well, 104. We're back, and I am now out of this trade for minus 35 pips. What a shame. I thought this area could hold, but as you can see, we have, well, technically we've not broken, but if we go to the 5 range, which is where the double bottom was, you can see there that we have now violated that. So out of that trade now for minus 35 pips.